I'd like the west coast of Florida is great. Yeah. So thanks for everybody being here today on this Saturday. So again, I like these kind of interactive workshop webinars that I do on Saturdays. Just kind of markets are closed. We're not distracted. We can kind of focus on the topic that we're looking at, which today we're going to look at how to identify and trade market tops and bottoms, and some of the trading tools and tactics that I use. And we can, kind of kick back, take questions, and kind of make it interactive and go from there. So again, thank you so much for being here. So a little background on myself. I've been actually, started my trading journey back in the 80s with a company called Coastal Corporation on the oil side, and they would actually, had a training program to teach you to trade oil. So I was fortunate enough to get in that, and ended up on the cargo side, trading cargoes of crude oil, and then ended up in products. Went out to Singapore a couple of years, traded all kinds of great products, fuel oil, jet fuel, all that stuff. That was really fun. And then eventually, mid 80s, went to work at a company called Transworld Oil, which was at the time the largest oil trading company in the world. So it was Transworld, Mark Rich, and Fibro. So it was really where I cut my teeth, and we were, big on the energy side, but we also branched out. We were in all the different futures markets, all the different commodities, foreign exchange, all that. So started trade options back in '87 with Transworld, and just kind of never looked back. So the basic thing with trading, the thing that I really got my interest was the systematic approach. And when I was at Transworld, they were really big into technical trading systems. They had a lot of different, quants and things like that, developing systems. So I was really very, very, very interested in it. And so when I left, I wanted to do my kind of own system, and kind of got a lot of ideas, and kind of went through all the different motions, a lot of research. And so what I'm going to show you today is kind of the trading system I've been using for quite a few years, that I put together and developed. And we'll talk about that, and then the trade setups and the other things that I look for, the other different tactics. So again, thank you for being here, and let's get started. So the following presentation today is purely for educational purposes. Any stocks, futures, or options mentioned does not constitute advice and should not be construed as a recommendation. So, trading to me really is a never-ending journey of learning to expand your trading knowledge and your skills. And what I've learned based on my 4-decade trading journey is that to become a better, more profitable trader, you really need to be able to read the charts, understand the technicals, and then manage your trading risk, which I like to do using options. Now, fundamental analysis is really important because it can really lead us to some great companies with good potential growth. But when it's all said and done, we really make the money on the stock price, not the company. So, when markets are uncertainty with clouds of different fundamentals coming through, it makes everything unclear. The fundamentals of a company can quickly become worthless. So from that standpoint, you really need to look at some other ways to kind of interpret what's going on. So how do we achieve trading success in this kind of environment, which is always uncertain? So you want to really look to define what's going to make, or what makes a successful trade, and then break those down and create the steps involved, and then have the trading discipline to follow these steps for each and every trade. So go back and look at the trades that have been winners for you, the trades that have been losers, and kind of dissect and analyze what made them a good trade or a bad trade, and then kind of put that into a systematic kind of approach to pursue all your other trades. So that's basically what I've done. So what I've come up with is a kind of a systematic directional trading process that I use for, using options. But we're going to talk about the directional part of it today. So number one, we want to plan your trades out. So how do you do that? Well, you need some trading tools, and then the tactics, for setting your trades up. What are you looking for exactly in a trade that's been successful for you? So I put together a kind of 13-step guideline that helps me to kind of go through a checklist to identify what's been a successful trade that I'm looking for in the future. So we can find these trading opportunities based on the macro trends. So, are the trends currently up, down, sideways? So we want to look at the overall macro trend. And so I call kind of what I call top-down market analysis, and we'll go through that. So you want to kind of see where is the macro big picture, and then kind of break it down from there. I like to always be aware of the seasonality. A lot of times, some certain parts of the market are going to have seasonal tendencies that happen pretty much every year based on seasonal fundamentals. So we want to be aware of what is the seasonality of certain things that we're looking to trade, and then breaking things down by industry specific based on where money is flowing, the rotation of money, what sectors it's going into, and then we can kind of jump in and break down those sectors, identify stocks that are moving or not moving. So to do that, a lot of times what I'll do is I've got a database of different stocks that I've collected and different ETFs, and so I'll scan that database using certain patterns that I'm looking for, and we'll go through that as well. And then what I've done is I've put together kind of 5 specific chart patterns that what I call high winning chart patterns, and I look for these specific chart patterns to identify the pattern that I'm looking for a potential good trade from what I call a swing low, swing highs. So markets are always going to cycle up and down. So we want to be able to identify those changes in cycles. So I've put together kind of a 5 chart patterns of these cycles that I look for. And then we want to validate stock or securities relative strength. And we can do that based on momentum flows and also the relative strength to a specific security to the market sector it's in. So that's another good way to evaluate if something's overvalued or undervalued. And then evaluate the market conditions. Are we at a high, low, or extreme uncertainty market? And markets are always going to have some degree of uncertainty. So we want to kind of quantify that to know what we're looking for as far as trade duration, things like that, as far as to manage trades. So these are 5 out of the 13. Now 6 is then establish profit targets. So going to always, before you ever put your trade on, establish a profit target where you think the specific security will go to. And so I use kind of what I've put together called top-down, price target analysis. So that it combines Fibonacci and some other things that I look at to help identify, support resistance levels that we can use to trade to for profit targets or defense targets. And then put together your, establish your trigger points for your stop losses. So you establish profit targets that are trigger points for a stop loss, and then our trigger points also for trade defense. So, that will help by doing the top-down market analysis and also looking at your price target analysis, which we'll go through. And then finally, place your trade. So these are all the steps that you want to do for each and every trade before you even execute the trade. And then once the trade is executed, manage it, and then monitor it, into its expiration based on the market conditions and your system that you're following. So just establish a certain defined checklist, and it'll make all your trades more systematic as well. Now, the other thing, the next thing is really think about it. You can't trade blind. So trade market cycles or swings, you need trading tools that can help you to identify market cycle turning points. So the markets are going to cycle, they're going to never go straight up or straight down, but we'll go into kind of cycles that we want to try to catch those turns on the cycles. So I always recommend trading a model or a system where the trading rules are going to be based on a repeatable, successful trading process that's clearly defined, making it easier for you to implement your trades. Now, a really great trading system is going to be one that you can use and adapt across all major asset classes on a short-term, intermediate, or long-term. So you want a trading model or system that you can use to trade anything: gold, silver, copper, crude, Apple, whatever it is. So you should have a dynamic system that can do that. And it really comes down to trying to catch the different swings and cycles of the market. Now, when we trade market cycles in any market environment, what I've done and put together is I design and use a rule-based system to highlight the intrinsic rhythm of the market, those cycles, that rhythm. Markets kind of have a rhythm to them. And so the PCT system, or the power cycle trading system, and indicators then allow me and my members to anticipate price activity rather than to react to it. And it's all based on these components. So I look for those 5 winning probability chart patterns. I use my directional cycle timing model to help me time cycle changes up or down based on different time frames. I'll look at overbought, oversold cycles, price extension, range extensions to see if markets are too overstretched up or down, and then too overbought, oversold. So that'll give you a potential turning point for maybe buying exhaustion or selling exhaustion, and that's what's going to cause a cycle change. So we can look at that with different tools to help us identify those changes. And then using momentum flows, very, very big to use momentum flows, really helps you to spot potential forecast the trend change direction up or down using flows and momentum on a specific security. And then you want to look across multiple time frames or fractal timing analysis. So you don't want to rely just on one time frame. So you want to break it down. And typically when we're looking at swing trades, what I define as a swing trade is based on a daily movement. So cycles up and down based on your daily time frame. And then we look at the lower time frames, you know, the 4 hour, 1 hour, et cetera, to help us kind of navigate into the general trend that we've established with the daily time frame. And then we want to use moving averages, which I kind of refer to as automated trend lines, because they're just basically a moving average that changes, but it's a trend line that we can use to, you know, look for trend support up and down. And then again, looking at Fibonacci support resistance levels to help us put together our targets for profits and for defense. So all this combination creates a system, and this provides a set of guidelines which allows the trade to come to you. So, you know, that's another thing that I like to talk about is let the trade come to you. So once you put your system together of things that work for you, wait for the trade to set up based on your system and don't try to chase the trade, you know, because we tend to have, as traders, we overtrade or we'll chase trades. Those are two things that really sabotage your results. So if you can make it more systematic and let the trade come to you, you're going to alleviate and cut down on a lot of that, you know, problem that you have with those two, you know, basic problems of overtrading or chasing trades. So again, whatever model that you're using, know the guidelines and the rules, and then stick to it and be disciplined. So the end result of using a trading system is that you're going to make your entry and exit decisions based on the model that you're using and not your emotions of fear and greed that are going to sabotage your trading results. So this is, you know, kind of, you know, what I've backed into over the years of trading is that you need to be disciplined. So you need to put together some kind of system that's rule-based to follow. Now, step two is the cycle timing model. So this is really critical for timing your entries and exits based on the market cycles. So to do this, again, I like to use momentum. So trading in any type of market environment really comes down to price direction, timing, and then managing your risk. And the best trading tools for signaling price direction and market timing to get in or out are going to be based on momentum flows. So what momentum flows are, there are certain indicators that we can use that I've put together and use that will measure price strength or weakness. And when measured across multiple time frames, this really creates a dynamic trend following indicator that you can use. So what it does, it's going to help you to identify new price cycle trends and changes early. It's going to help to validate the strength or weakness of that cycle trend that's changing. And then that will help you to stay within the trend to maximize your profits. So if you've got a really strong momentum base, you're going to be more confident with the direction, and it's going to help you to stay with the trend or that trade to, you know, maximize your profits in that specific thing that you're trading. So the next thing is your timing edge. So this is really critical as well. So if you look back on all your winning trades, your losing trades, you'll probably identify really quickly that, you know, the really great trades, you had a great entry, you know, you got in, you know, right at the precise time. So you had no equity against you. So that's what you want to look for, that kind of really good timing edge. And that's going to be accomplished by, you know, having good trading tools to help you, again, spot those cycle changes. So what is a timing edge? To do this, to kind of get that edge, it really comes down to incorporating multiple time frames, which you know is referred to as fractal analysis. And what this is going to help to do is going to give you better clarity to the overall trend, and then can be used for your swing trades or your day trades. So again, what you're going to look for is you know, if you're looking at a swing trades, I'll look at kind of a daily time frame, and then I'll look for those time frames that to get the bigger picture. In order to get the idea of general trend, which will be based on the daily for swings. Now, then I drop down again and look at the shorter, lower time frames. Those are going to be used for plotting the actual trade entry into the general trend. and then they should be aligned with that general trend to show that trend strength or weakness. So you're never going to get the whole picture of trend just using one time frame. So again, we want to use multiple time frames and then back it into the bigger, kind of what I call the anchor time frame, which would be a daily or a weekly for a little bit longer term. So then the next step is the high winning probability trades. And again, I put this together, these chart patterns that help me identify what I'm looking for as far as a good pattern that can lead to a potentially great trade setup. So let's go through these kind of patterns and I'll kind of describe them, show you examples of what they are and what they look like. So first off, the patterns, there are basically 5 patterns, but within the 4 these patterns, there's going to be one that I consistently look for that gives me the best potential momentum, and that's what we call the volatility compression squeeze. So we'll go through that. So it's basically a period of price consolidation where price is just really churning sideways, and then what's going to happen, it's going to either break up or it's going to break down out of that sideways consolidation pattern. So we can identify that, but within these 4 patterns, what I look for is if I see the volatility squeeze setting up within a cycle high reversal, which we'll go through, or a cycle low reversal, or a cycle low retracement reversal, or cycle high retracement reversal, I will look and kind of go for that pattern first. So we'll go through some examples. So these are the 4 basic markets chart patterns that I'm looking for. But if I spot this volatility squeeze within these 4 patterns, that are really kind of focused on those as a potential trade setup. So let's go through and I'll show you what they look like. So the volatility squeeze breakout is based on a pattern which identifies a period of price consolidation. Again, where that price is coiling in a very tight pattern, and then it has an explosive momentum breakout either up or down. So the next question is, okay, which way is it going to break, up or down? So we can use our momentum to help us kind of validate and spot that potential forecast of price movement. But we want to look at multiple time frames, and we see a volatility squeeze covering multiple time frames, then those kind of breakouts are going to be even more powerful with greater fall through, like a kind of chain reaction explosion, or what I sometimes term as lightning in a bottle. So you get a lower time frame, let's say a 30-minute that's in a squeeze, that triggers an hour, the hourly triggers the daily, so you can get a really big kind of tsunami wave of a trend change. So it's this chain reaction that is set off by those lower time frames that can really develop into a powerful price move. And it's great for swing trades and great for day trades, offering you that's what's going to offer that big timing edge. And also in trading, remember, time equals risk. So the longer you're in a trade, the more things that can pop out and happen. So that's the other beauty of, if you can find a compression squeeze to trade, your tendency is to be in the trade a lot less time, and the movements are pretty explosive. So this is kind of basically what the pattern looks like. So you can see, and with the trading tools that I've developed, it'll identify the start of a squeeze with these dots, okay? So you can see the dots, but you can see this was an Apple 5-minute chart just to kind of illustrate the squeeze. So you can see how it's kind of tight pattern. The price is just going up, going down, just churning. And then what we want to look for is potential breakout direction. So to do that, I'll look at define either a trend line or a horizontal kind of trend line of prior highs or prior lows. And then when those either lows or highs break, that's going to tendency to, break the momentum, either will break up or down, and that's going to be your breakout of the squeeze. So the next thing is using momentum to give us potential price direction based on momentum. So in this example, you can see the prior highs, or that trend line, was where it broke, and then it had an explosive move up. But the momentum indicators, which I'll show you next, will give us a potential direction as to where that squeeze will trigger either up or down. So here's some really good examples. This was Netflix, just multiple different squeezes on a daily time frame. So again, you can see in this, this one chart, you can see these dots. They're either, and I've got them color coded. So if they're green, that means momentum's up. If it's kind of that magenta, momentum's down. But you can see here, we've got this very tight squeeze. See the dots there? Very tight price pattern. And then you can see momentum, the oscillator down here, starting to go up. Now I used two different momentum measurements. Cycle 1 is a very fast momentum measurement. And then cycle 2 is a slower, but in a little bit different combination of momentum that I use, but it confirms the momentum of cycle 1. So when I first, put the system together with the kind of this fast momentum indicator, it would have a tendency to get you chopped around too much. It'd get in, get out, get in, and get out. So I put together the lower study 2, which is a slower momentum, and this kind of confirms and helps you to stay, kind of smooths out this momentum indicator. So then I've got rules based on, the trade setup. But this is what the squeeze looks like. You can see the momentum up, where in the scope, breaks out to the upside. Then it comes back down in this particular case. Again, see the dots there, and then another period of price consolidation. And so you see the momentum here came back off, see it coming back off, and then it just went sideways, no momentum, right? And then we had what we call a cycle reversal. This is the other indicator. It's a really good tool. See that reversal indicator, and then momentum, reversal indicator, then momentum starts building, then it breaks out of that squeeze. Goes up, comes back over, consolidates again. Here's another squeeze. And then what happens, see momentum, how it comes down, price comes down or goes nowhere. Finally, another cycle reversal, momentum starting to kick up, and another break to the upside. So that's what I'm looking for, that kind of combination of the price churning, tight squeeze pattern, and then the momentum to give potential direction, and then, using specific trigger points on price for the actual entry. So that gives you the really good timing edge. Now, here are the other patterns, just to show you some really good examples. This is what I call the cycle low reversal. So this is basically when the market is broken down below all the key moving averages and then finally has a bottom and reverses. Okay, so this was just on S&P 500 SPX. And you can see this tremendous sell-off, right? So big, massive sell-off, extreme range bands just hugging here. And this is the 8 exponential moving average, just really getting sold off in this channel. And then finally, what happens, you'll get buying exhaustion or selling exhaustion in this case. And to identify that, we'll use our momentum indicators. The first thing that will happen, step 1, is we're going to see, this is a kind of forward-looking indicator. This is the cycle reversal indicator that I've developed. And it shows you where extreme, if you're really oversold or overbought based on percentiles. And then when the indicator crosses the moving average of that indicator right there in this example, that's your first signal. That's usually, I don't use that for the trigger, but it's alert to potential change in cycle. And then the next thing I go to, and here's the arrow there, will pop up that purple magenta. But the next thing to confirm when it's going to change, you need momentum to actually get that ship to go in the other direction. So if you ever, been on a big ship, a cruise line or whatever, they can't turn on a dime. It takes them a while to turn. So that's what this momentum helps you to do. So finally, we know that the turn is probably going to come, high probability, but then we want to get our timing edge to precisely get into it so we don't get in too early or too late. So that's where momentum comes in. So cycle 1 starts to turn up, and then I used cycle 2 to confirm that. And you can see here, it starts turning up, and then it really starts to move. And then I use moving average, different crosses that I look at. That's a specific cross that I look for there, that orange arrow there. So also showing momentum. So that's a cycle low reversal. So you can see it was below all the key moving averages, the 200, the 8, the 21, the 50, and then it finally turns the corner. But think about it, you can start taking shots here and here, and you just get run over. So you want to use these kind of momentum tools to help you really get that edge into that cycle change, to get you back into the rhythm of the market. So you can get out of rhythm really easy. You're coming down here, you think, oh, it can't go any lower. And then you try to take a long, and it runs right through you. So you're totally out of rhythm, and then you try to sell. So you can get really jerked around. That's very frustrating. So these tools have really helped to eliminate those kind of stressful kind of, back and forth. Now, this is a cycle low retracement reversal. So what this basically is, this was a cycle low, so it's below all the key moving averages, and the cycle low retracement is where we have a movement on price to an area of support, and then it bounces off that support. So here's a good example. This was a natural gas UNG, the ETF. And you can see UNG, it had a big sell-off. So see how hard it was selling off here? Extreme range bands, it's the 8 exponential moving average that I use. And so just moving down in that channel. Now it comes down here, and these two different lines, solid lines, this blue one is the 200, that's a daily chart, 200-day moving average, and then the yellow is 150-day. So these are two key really big moving averages. The 200 is the kind of, to me, the big daddy. So you can see it comes down here, and what happens? You know, it breaks through. You know, it's kind of like a mattress. You got to think of it that way. Give it a little bit of room. But what happens, you'll see then the buyers are not buyers, but the sellers, you know, start to get exhausted. And market, you know, technicians, everybody, systems, they're all looking at these key moving averages as well. So you get down here and then it chops around. See how it chops? So it chopped here for basically 1, 2, 3, 4, 5 days. So that's where you get the timing edge using momentum. So first off, if you look here, we had a cycle reversal right there. See that purple? Okay, well that then it signals, okay, get ready. We're getting ready for potential cycle change. And then it gives you time to really define it and get into it with an edge. And then we had cycle momentum, or my fast momentum indicator starts moving up. And so you can see it starts breaking up here a little bit, still going sideways. And then my momentum, my other one, the slower one, confirms that. And then I get this specific cross that I look for here, and then off to the races to the upside. So we've bottomed and moved up. And then we use Fibonacci levels to show us the potential, you know, retracement areas back to the upside. So what I call commitment to the move. And then so we put our fib levels in, and so it all, you know, puts together a system approach to identifying cycle changes, identifying when to get in, and then using our, you know, Fibonacci and target analysis, we can look for different areas where it could go through the different levels, you know, support what our resistance 1, 2, 3, 4, etc. So that's a cycle low retracement. Now here's a cycle high reversal. This is when the market's above all the key moving averages and finally gets exhausted and the buyers run out of juice and there's no more buyers, and finally we get a kind of a, you know, mean reversion. So this is an example of QQQ. This is a cycle high reversal. This is a daily time frame. So what I like to look at is the weekly and daily. When we get in extreme markets, which we've been into the upside here, we'll show you in a few minutes. I like to refer to the weekly, and that can really help you to identify when these markets are really getting overstretched. But here's a really good cycle reversal on the daily on the NASDAQ 100. So you can see price just really churning up here, just a beautiful trend up, you know, hugging the upper end of my extreme range bands. Here's the 8 exponentials, just perfect march to the upside. And then finally, we get a cycle reversal right here, that indicator down here. Again, it's a forward-looking indicator here. Get the arrow, so just for, you know, for visual, you can see it. And then we're ready to say, okay, well, let's watch out. What's going to happen? Now, then the momentum starts oscillating down, okay? So, and then you start breaking moving averages, and then that confirmation there, and then you get a big move to the downside, and then it goes to your certain fib levels. Here was a 618 and a certain key moving average, finds a little support, etc. So that's a cycle high reversal. So it's above all the key moving averages, and then finally gets exhausted and moves to the downside. Now here's a cycle high retracement reversal. So this is where you're getting a price movement to the upside. It runs into resistance of a moving average on the upside. So here's an example of SPY, and you can see it's just has a really steady trend to the upside. Just really deep, and these are my extreme range bands. I'll show you these in a minute. So this is based on, you know, basically average true range, and it shows you kind of standard deviation. So here's a normal range band is that blue line. That's like a 2 ATR, and then the extreme is 3. So when we get to 3, you can see it just channeling really strong trend between those two bands. And then we get up here, and this blue line, again, this is a 200-day moving average, okay? And then this was a descending trend line, So a lot of potential overhead resistance based on that. And then you can see got a cycle reversal here, and it starts to stall out and move down. So typically we'll have kind of the mean reversion back to your key moving averages. So that's a cycle high retracement reversal. So these are the patterns. And then if I see a squeeze within it, then I really want to focus on that specific security. So it could be an ETF, a stock, it could be a futures, it could be oil, whatever, it could be anything. Okay, so that's a cycle high retracement. Now let's take a look at the current market here and see, where we're headed based on kind of what I call top down. So let's take a current market review. Now, again, going back to markets and timeframes, these markets, they all trade in cycles, even during periods of extreme market uncertainty and volatility. So they're never going to go straight up, never going to go straight down, but will cycle in channels up, down, or sideways. So the current market, using S&P 500 SPX, the macro trend now is up, okay? The long-term trend is up, and the medium-term cycle trend is up, but there's short-term momentum starting to fade. So let's go through that, and I'll show you this top-down review, okay? So I'm gonna pull up the S&P 500 SPX is kind of the general reference point for the markets, okay? So if we look at here, these are my indicators below. So again, here's my, just to kind of identify these indicators, this is the cycle low, this is my lower steady. So this will be a fast momentum measurement. Cycle 2 is a slower momentum, and here's my reversal indicator here. Now, so what I look for in this indicator is it's nailed every market bottom. I'll show you. It's not that complicated. These tools really work. So I'll go back and I'll show you each various different market downtrend we've had, 2000, 2008, and they show you the same exact thing. So we identified the market really bottomed out right here back in April. Okay, so you can see, first off, look at this. This gives you the potential to see, okay, here's the reversal indicator. Okay, so the white line is the actual indicator. Then the yellow is the moving average of that indicator. Now, one second here. So you can see this massive sell-off, right? And then it comes down, and so here's the oscillator. You see big momentum selling, right? But then what happens? This is back in March. We have a cycle reversal. Okay, so let me show you that exactly. So started seeing this thing having potential to bottom out right here. This was February, actually. Okay, so February, March, April, May, but then, okay, we get our first signal right here. This is momentum 1, fast momentum. So this happened in April, okay? So April, and then you can see momentum 2. So that was the end of the downtrend, April, right there. And then we get this moving average cross that I use right here, that orange arrow. So the trend, the market bottom. So we're in a uptrend now on the macro trend. And then you can confirm that. You can see that from that swing high back here in January of 2022 was the high of the market. The low was back here in October of 2022. Okay, so that's the October low that everybody's been identifying with. And then look where it went, sideways. Now, this past week, we broke above the 50% retracement. We held above it. We broke it 2 weeks ago in April. Then last week, and then we broke above it, closed above it in May, and now we're between it. And you can see it's chipping away at that 618, which is coming in at 4311. So, it can back and fill, back and fill, back and fill, but the potential here, the high potential is for it to break this level here and then head back towards those prior highs. So that's your typical market cycle move. So that's the monthly. Now, if I go back here to the last time we had a major massive sell-off, you'll see exactly the same pattern, exactly the same. So here it was back in 2008. Let's just kind of go through it here. So 2008, you can see the reversal here. Now we've had a number of reversals, okay? But what we're going to see is a confirmation of that reversal. with momentum. Again, you can get chopped around. So here we've got the reversal right there. So it's a forward-looking indicator, but then we get the confirmation. Now we've got cycle 1 going negative, 2's coming off, and so you can see now it starts really breaking these key moving averages. We get a massive sell-off. Look at that momentum really, really getting pushed hard to the downside. Very aggressive selling coming in. Now what we're going to look for is a bottom. Okay, now remember, this is a monthly. Every bar here you're seeing is 1 month, but this will show you where the market bottom, just like I showed you currently. So look at the momentum. Cycle 1 down hard. We're getting very, very stretched to the downside, but still a lot of selling pressure coming in. Really getting hit hard. Momentum still hard down. So follow the momentum. It's just really big extreme sell-off. Now look, starting to get a reversal right here. So that's the first thing, March of 2009. Okay, so that's the first signal right there. And then we want to confirm it with momentum. See the arrow? So that's your first confirmation. It's not a total confirmation, but that's your signal. Get ready. We're getting potentially a bottom starting to put in. Then to confirm the bottom, I use momentum. And then where cycle 1 is going up, not quite there yet. Just be patient. Cycle 1 goes positive. We're pretty much done. And we start I like to see that 2 confirm it so I don't get suckered in. So then it starts moving up. You can see the momentum here on 2. So then we're done. It's up. It's up. The cycle's back up. And here it was back in 2000. Same exact thing. So over and over. So same. Here you get the cycle reversal, came early right there. So your leading indicator right here. Okay, then confirm that with momentum, starts pulling down. So what happens? The market's running out of buyers exhausted, and then whatever happens, is really making this thing escalate to the downside. And then we get really big selling coming in, and see how the momentum is really getting pushed. Okay, so then we're going lower, and we're looking for when this thing will end. So we're just going to look at this where my pointer is. Watch this white line. That'll be the first signal when it's starting to bottom. Okay, here it starts crossing. That's going to be October of 2001. So we're starting to see a potential bottom. Okay, so then we've got cycle 1. You can see the oscillator starting to push back up, running out a little bit of selling. Now it's very close. So you can see here's the cycle reversal. We're getting close to the bottom here. Cycle 1 is not quite positive, 2 still negative, so still not confirming a bottom yet. We want to see that momentum confirm that. So then we get cycle 1 going positive finally. 2's not positive. This is why I like to have 2. See, it's still potentially going lower, but cycle 1 is telling you it's very close. When I start seeing positive on 2, that's pretty much going to confirm it's done. It's done on the downside. See how 2 is still down? And then 1. So this is why I use cycle 2 as that confirming momentum indicator, just for exactly what you're seeing there. And then 2 still down. Okay. 2 still down. That's the red one where my pointer is. That's exactly what I was talking about. See, cycle 1 is faster, so it goes up here. You could have been sucked in, but 2's confirming it's not quite safe yet. So still watching 2. Now we finally get cycle 1 going again. Now this time it's probably worked. Okay, now, okay, see right there? And then we get the moving average cross, the bottom's in. So that's it. So that's your macro, and then your what I call weekly long-term is your weekly time frame. It's also positive. And you can see we had a nice turn up here. Now we're into that 618 coming in at 43.11. Positive momentum, and that's your key resistance right now. So then what we want to do is break it down to the next time frame, which was the daily, or I call medium term. And you can see here we are also positive momentum. And then what we're going to do, so that's, the macro, all the trends are up, but we are starting to fade a little bit. So the next thing I usually do is I'll break down to a 4-hour time frame, the next increment in. And you can see here momentum starting to shift down. So we're starting to get a little bit of weakness in momentum here, but still cycle 2. So all this means is that, it could have a pullback into these kind of areas of support, or it could just churn sideways, but we are getting a slowdown in momentum, so that's a little buying exhaustion. So that's currently where we are on the S&P 500. So the two curves below cycle 1 and 2. So the indicator below cycle 1 and 2 is a cycle reversal indicator. Okay, it's a different type of indicator. So the white line, when it reverses down, it gives you a reversal signal. So we'll go through some other examples, but that's kind of my leading indicator, which signals an alert. It's an alert, not the trigger. Okay, so that's a really great indicator. And then, sector rotation, I just threw this in here. You can see where all the money's been going for the last year, basically in the last 5 days. Everything's still back in consumer discretionary, consumer services, and then technology finally starting to get a little bit coming off there. So you see year to date, all the money's been in communications, discretionary, and technology. We're getting a little bit of rotation out. And then if you look here, I'll show you the technology sector is really right here. Technology is really stretched. Okay, so let me show you. This is where we use an indicator that I like. It's called extreme range band. So let me show you what the technology sector looks like on that XLK. So we look at XLK. That's going to be your technology sector. And if we look at that part of the sector, you can see here is a weekly. So see the extreme range bands is up here to that blue one, and that's the most extreme. So see how it's up here, and it's very, very stretched, overbought. So this tool is so good because it really can help you identify when markets might start getting exhausted to the upside or downside, and that's where you get the first change in cycle. So if you look at this, we're not quite rolled over yet. When it finally crosses here, there'll be an arrow pop up. But the last time we were this overbought on the XLK was you'd have to go all the way back here to right here where you're seeing this crossover, that white cross the yellow. That was August of 2021. So you can see August 2021, it was up to that third extension there, and then finally buying exhaustion, we had a mean reversion back to this 21 period moving average. That was very extreme, and then we pushed back up again, and we finally, had another one here. So if I had my momentum indicators in here, they would show you, when this is shifting. But this is such a great tool. So you can see XLK, and then QQQ. If you just want to take a look at that, it's very, very extremely stretched. Still could go higher, but it's very, very stretched and very close to getting a cycle reversal as well. So basically, you want to be very cautious right now. The markets are in an uptrend on all time frames, but we will get some kind of mean reversion, and things, we'll have little corrections and then move back up. So right now, be very careful and cautious of these. So you can see the last time we were this extreme was back here. This was August of September 2021. See it reverse here, and then mean reversion. So this is a really fantastic tool that helps you to kind of manage these excesses, swings when they get too extreme up, too extreme down. Okay, so that's a really great tool that I like to use. Okay, so the next thing is I always like to follow seasonality. So what is seasonality currently telling us? So seasonality is just your trends based on different, things that affect the market fundamentally, and that creates a seasonal trend in different sectors. So currently, just looking at the S&P 500 seasonal trends, this is kind of what our continuation charts of the seasonal trends. This is September chart. So you can see this goes back 5 years, the red, 15 years, 26 years. And so we are currently right here. We're right coming into a cycle high. Okay, so if you look at this 15-year, the black line, you can see it's starting to go sideways and the potential pullback. The 26 years tends to pull back. The 5-year data tends to pull back, okay? So, that doesn't mean it will, but the historic tendency is for it to stall out. So again, we're starting to get that June, a little bit of a pullback, so we'll see how that extends. And then it tends to get another cycle low, swing low on a seasonal basis back here towards the end of June, and that aligns with the 4th of July. And so that's so typical. Then you get demand coming back in, July weekend, and then we get a swing up. So these are ways that you can also kind of help navigate the markets and the swings based on looking at where seasonality is. So that's a current look on the S&P. NASDAQ, very similar. You can see it too, tends to have a seasonal swing high around the, this point in time, June 8, 10, and then pull back, and then again, a swing low, seasonal low, end of June with a potentially nice rally back up into July and a little bit further. And then here's crude oil, just threw this one in. We tend to get a cycle low right about probably next week to the end of June, and then you get a seasonal rally into the 4th of July as well. So that's kind of an overview of the seasonals and how that can help you to navigate the markets with your trend following systems and swing trading systems that I like to use. So that combination. Now the next step is scanning process that I put together for helping to spot these breakout reversals before the trade or before the herd. So this gives you a leg up on, constantly what we're at Power Cycle Trading every day in the trading room, whatever, we're constantly updating our watch list, so we'll get a watch list of things we're watching for, either for maybe a breakout trades, longs or shorts. And a lot of these trades will come from this scanning process. So let's take a look. And we'll scan and see if anything's setting up. So here's currently my custom list. And just you can see what it looks like here. And we'll go through it in a minute, but it's a kind of a matrix here. So, here's your, your whatever securities. These are all the things that I followed. And then I can break it down. I can look at the S&P or NASDAQ stocks, et cetera. But here it is. This is SQD. That means it's daily volatility squeeze, the daily. And then TDD, I can't say it, it shows you if the squeeze is triggered. So this, a lot of times you can see if something's triggered, you still have time to get into it. And then I'll like to monitor a 4-hour squeeze, a 2-day squeeze, and a weekly squeeze. So you can see currently TJ Maxx is in a daily squeeze, and then it's color coded. So when it's green, the momentum, it's based on cycle 1. So that's the fast momentum. So this is currently green, so it means momentum's up. When it's red, it means momentum's down on cycle 1. You see it's also in a squeeze on the weekly, and et cetera. So these are things that then we can monitor. We then flip through it, see if any of these are set up within the patterns that I look for, and then this will give us a list of trades, potentially longs or shorts. So let's take a look at a few here currently, and I'll show you what they look like. And then we'll go through the setups and the other things that the breakout kind of patterns, and I'll show you some past examples. So the question is, what is your scan criteria for the daily volatility squeeze? So this scanner has the volatility squeeze coded into it, okay? So then it picks it up. Anything that's in what I've defined as the volatility squeeze, I've coded into the scanner, and then it picks it up. So let me show you then the next step. So let me move this over here. And what we're going to do here now, below here, you'll see my multi-time frame squeeze alert. So what this is, and let me pull over my other chart. So the way that we'll go through and we'll kind of scan through and look for the trade setups, I typically I'll put this tool below. So I'll take this over here, pull this down. Then we're going to put this on typically we'll look at a 4-hour daily and a weekly chart, and I'll scan through all the different ones that are in squeeze to see which ones meet my criteria. And after doing it long enough, you can do it pretty fast. So I'll put this over the 4-hour, which is just the time frame right below the daily. And then so we'll flip through a few of these. So we're going to go through. Here's the current list right now. Okay, here's the list I was showing you. This is everything I followed, and then we'll go through just some others that are S&P only, NASDAQ only. So if I click on this, you can see here, this populates everything that's in a daily squeeze. This is coded in what I define as a squeeze. And then if I want to click here, I can see what's triggered. So you can see everything is triggered. IYT is triggered out of a squeeze. Now this will stay for 3 bars or 3 days, and then it'll go off. Here you can see that XLE just triggered out of a daily squeeze, which looks pretty good. This is one that we're looking at closely, and maybe it looks like it's setting up for long. And then you can see, the other things that have set up just triggered. And here's 4-hour squeeze, things in a 4-hour squeeze. Here's everything in a weekly squeeze. Okay, so then what I'll do is I'll put this, typically start with a daily, and then I can flip through and I can quickly see what they look like. So here's TJ Maxx. All right, so here it is. See, it's just real whippy. It's still inside the squeeze. Now momentum is up, so the potential direction is to the upside. Now, when you look at this indicator below, what this does, it helps me to see every time frame on one chart. So this top row will show anything in a squeeze. So you see the red, that means it's in a 10-minute squeeze, and it's in a daily squeeze. Now the row below it shows me what the momentum is on each time frame. So I can see if it's red, that means momentum is down based on cycle 1. If it's green, momentum's up. So with TJ Maxx, I can see, well, my 60-minute momentum's positive, 2 hours positive, 4 hours positive daily, and I've got a daily squeeze and a 10-minute squeeze. So then I can, quickly, look to see if I want to do anything. So if I put this to a 10-minute, you'll see that there's a squeeze developing. I don't have 10-minute, but you can see the daily. We'll go through some others, and so you can see the daily. So that's really whippy. I don't like that pattern that much. Here's Lowe's. So Lowe's is very whippy too. I can quickly look at things that look good for me, but this is kind of what we're looking for. That's and here's Home Depot. See Home Depot coming into all that overhead moving average resistance. So that's another thing you want to look for. So really nothing to jump to or jump through the hoops on that one. Here's Gilead Science. Now the other thing too, I always will look at the weekly time frame to see what it's doing. I just don't have enough space, but what I'll do with the weekly is I'm looking to see if we're getting a cycle reversal. So for example, Gilead, if we start getting that weekly reversal and it's got that squeeze, this is when I'd probably look to pretty close. So I always look to see where the weekly is. Here's Occidental. Now this one looks pretty good. You can see it's starting to fade though with momentum on the 4-hour. So be watching that. And then you can see down below where watch my pointer, see that second row, it's got 30-minute negative, 60-minute, 2 hours, so momentum starting to fade. Now it does have a 2-hour squeeze to the 2 hours, so I can put this, I'll show you. So here, if I go to the 2-hour time frame, you can see there's a squeeze developing there. So, if you've got multiple squeezes in this situation, if momentum is all up on our momentum indicators, then that's a really good one to go to. But it's really mixed right now. It's not ready to do anything. So you can quickly, quickly scan through these squeeze patterns to see if any of them are starting to make sense. And so here's just crude oil, nothing there. Momentum starting to fade, see it starting to push back down. Here's heating oil. Here's, here's ExxonMobil, it's in a squeeze. Now this looks pretty good. Look at all the different squeezes. See my pointer, it's got a 15-minute, 20-minute, 30-minute, 60-minute. So if I go here, I'll show you all the different squeezes. So that's why I like it. It shows me everything on one chart. I don't have to flip around. So here it shows there's a 15-minute squeeze. There's a 20-minute squeeze. There's a 30-minute squeeze. Okay. Now what this is showing me though, see these squeezes are setting up, but momentum is down. So this is trying to break to the upside, but momentum is starting to fade on the shorter term. So this could pull back. So I'm not seeing anything specific that looks that great. Let's put up, let's do a scan. I can put up here the S&P 100 or NASDAQ 100. So if I put here, I'll go down to, this is Thinkorswim. I'll go down to this public list and I'll go to let's go down to the NASDAQ 100 right here. And so 100 stocks in the NASDAQ. So let this populate. And then you can see there's Ross, Honeywell. Let's flip through a few of these real quick. There's the Ross. It's pretty tight squeeze, but real whippy, not anything looking to set up right away. Here's Honeywell. Now, Honeywell is starting to look okay. Let's see, yeah. Honeywell, you can see, is really tight pattern, very whippy. This is one to keep an eye on, but not anything that's looking to develop right now. Let's see if there's anything real quick I can find. Nothing right now. So that's a few. Let's take a look at one more thing. Let's look at the S&P 100 right here. Where is it? Oh, here it is right here. Here's 100 stock S&P. So we've got Honeywell, Lowe's, Home Depot. Let's see if there's anything there real quick. That looks pretty good. Lilly, see, it's at the top of the range. Looks like it's going to maybe break out. Here's Chevron. Nothing right there. Now here are a few that have triggered. So let's see if these triggered. You can see what it looks like after a trigger. Okay, so PayPal, let's take a look. So these are ones that have triggered out of the squeeze. Here's PayPal. So it had a 1 bar squeeze, not doing much. Here's MetLife. 1 bar squeeze, not doing much. JP Morgan. Not doing a whole lot. Here's Union Pacific. Got that 200-day. So these are all kind of 1 bar. These are going back and forth. Now here's one you can see, Lockheed Martin. This was a good one. You can see how it's, let's back up here. You see Lockheed Martin. This is kind of what you're looking for. That's why we're constantly updating the list. So here it is. See that nice volatility squeeze, and then you can see the 200-day moving average. So that's going to be your price trigger. So then it finally breaks that 458. This was back on the 6th, right about here. Okay, so then it starts to, momentum's all shifted up, and it's trying to get through the 200. It finally breaks through. So that's Lockheed Martin. Here's ConocoPhillips. There's just a lot of these. There's so much overhead resistance. They're having a hard time really, exploding. Morgan Stanley. Boeing. So there are a few there. Now, the ones that really, there are a lot of energy stocks. There's a lot of potential right now, but the energy seasonality is not quite in line. So it could pull back a little bit more. Here's my list of energy stocks real quick. I'll show you those. So Oxy, Apache. So let's go through these and I'll show you a few of those that might be setting up. Here's Oxy. Not quite ready, but very tight range. Here's Marathon. Marathon doesn't look too bad. You see over here, it's got a 20-minute, 30-minute, 60-minute squeeze. I'm going to write that one down. So then we just constantly make this list and we look. So you can see here, it's starting to break this prior highs right here, but you have that 200 days. So see, these moving averages are going to kind of stall out a little bit of the move, but they still have potential for more upside. And then when you get the seasonal trend to kick in towards the end of next week, these are the ones that you want to potentially look for. Here's just a couple others. Here's a Valero. Valero looks, pretty good. It's worth watching. That one, this one will probably have a pretty good pop, maybe towards the seasonal, when we get towards closer to the end of June. Here's ExxonMobil. So none are ready to go, but unless you put the list together, then again, I'll look for the breaks of these price triggers of, prior swing highs, things like that. So that's kind of where we will tend to get a lot of different, stocks to put on our watch list, and then we can take it from there. So here's the next thing is I wanted to show you all the different trades that we've done based on these. Yeah, oil, the Iranian deal they're negotiating again. I haven't seen the outcome of, trying to, tailor off the new thing and let the Iranians export their oil. So now here, I have a trade alert service, and these are just, I want to show you some examples of the different alerts, and these are based on the trading system and, what I've been going over here earlier. So these are what I call the Elite Open to Close Trade Alert Service. So this is through the 8th. So we've had a total of 614 trades closed out, 458 winners, 36 break evens, 120 losers. So 80% win rate. So since, this is a combination of 4 different alerts that I sent out, but, started back in 2018. So I want to go through and show you some of the different trade setups, and these are based on using the trading system and then the scanner to find the trade. So here's one that we just did. This was Amazon. So this is one that, and these are, did a calendar called diagonal, but I'm just going to show you the entries basically based on the system. So here's a trade that we did on Amazon. So it was an entry on the 1st of June. It was traded at 121.90. So when I send these alerts out, some members just do their own things, but when I send them out, I'll always give an option, different option spread strategy that you can use. But some members just want the entry alerts, okay, and the exit alerts. So here's Amazon. So it was entry right here. So you can see momentum cycle 1 and 2. We had a reversal, and this is a 4-hour time frame. So you can see it was breaking here, that's 618 retracement. And so the next target area that we had was up here in this area, this 126, 130. So set up this long trade here using calendar diagonal, and we actually adjusted it to butterfly and then got out right in here. So got out at 126, but you can see 121 to 126, that was one recently. And then here's Microsoft, a number of different ones. This one we did back on May the 11th, and we did this with a broken wing butterfly, but the trade entry was traded at 309.45. And we got out of this one at 317.79 based on the trade setup that we had. So got in right here. So you can see momentum. We had alert reversal here. Perfect. The perfect trade was right here. See that really beautiful breakout. But then we got into the trade right here. There was a lot of option activity right there, so we were targeting that. We had a grind up there. So that was one there, based on Microsoft. Here's another one on Microsoft. This was on the 29th of March. It was traded at 280. And again, this was an alert trade setup, but you can see right here, momentum was pushing back up. And so again, we were targeting this moving average right there. There was a lot of option activity there. Look at that. But the perfect trade was right here. So right here, this was the perfect trade for Microsoft. You can see the alert, the cycle reversal turn there, right here and right here. See, it came down and turned, and then we had momentum cycle 1 and 2. So that was just the perfect entry. But missed that, we got in here. So that was Microsoft. And then, and I'll point out the perfect entry when I see it. Here was one that we did on IYR, a short. This was back on the 15th. It's traded at 84.10. So this was a cycle reversal. It was a retracement reversal on this one. And IYR, you can see it had been in this volatility squeeze, just churning. This is the real estate ETF sector, just churning sideways. So we're looking for potential short trade setup. Then we got a momentum started to shift down here. We had a cycle reversal. So then we had another moving average cross here. So went short right there. It's trading at 84.10 and then got out right there. And this was using different option spreads, but that was the entry exit point on IYR, and that was a volatility squeeze that we were trading off of. And then down to key support. See that 618? That was our target area right there. So we hit our target. So that was a really nice swing trade to the downside. Here was another one. This was Google. This was set up on the 1st of May. It was trading at 107.60. And you can see this just really consolidation tight squeeze pattern on the daily. Look at how long it had been sitting in the squeeze right there, just really churning. So we've been watching this for some time. So got in here, we had a cycle reversal up, and then got in here. Now we used a calendar diagonal on this because of this condition, thinking it could take some time, and then it finally broke out. So we got in here and out there. So that was Google. Again, these are all alert trades sent out to alert members. So that was Google. Here was Oracle. This is one we also did early May. So it was traded at 96.60. And so another one, a very nice tight volatility squeeze with Oracle. Look at this one. It had just been sitting sideways for weeks. And so then finally we had a cycle reversal here, and then we started to get momentum, and we got in perfectly right there, churned sideways, finally broke to the upside, got out there. Should have stayed with it, man. This thing is just ripped to the upside. Just to show you Oracle real quick here, what it's looking like. This was a killer. This was a really good one. So we got into the trade. Let me just back up. We got into the trade on the 5th. So right here, perfect entry. And then it just had that huge spike up. We got out here, had a retracement back to the moving average, and then back up. So that was Oracle. Here's one at XRT, the real estate, not real estate, but retail XRT. This was a short using a put calendar. So got into it on the 23rd. It's traded at 67.74. So retracement up here to those moving averages, and then momentum shifts down. Got short right there on that breakdown and moved to the 200 days. So got out at the 200 day at 64.53. Here's one on Devon, the energy. This was a long using a call calendar, but this is going long. It was trading at 62.30. So got into it, was trading at, what happened? Sorry about that. So this was another one. This was QQQ. This was a short entry on the 2nd right here. You can see our momentum cycle reversal down. First thing that gives us a potential is we see that reversal right here. And then we're looking at momentum starting to shift down. Got a moving average cross there. Starts to break our price trigger of a moving average. Down she goes. We're looking for this area here, 618 as our support. That's where we're targeting to get out. Worked out perfect on that. Here's another short on QQQ. Got in here. This is a retracement failure up into the moving averages. Momentum down. Short there, out there at that moving average. And another short right here on the 11th to the downside, down to support. Got out there at that support level. And here was a long on Valero. This was out of a volatility squeeze. You can see here momentum shifted up. And so we got into this trade right here. Cycle reversal, momentum back up. And looking for the kind of a moving average, kind of a option activity in there. So it targeted that area. So that was Valero. So these are all the different trades, but based on the model, based on the volatility squeeze, based on these different patterns. Here's another short on QQQ. So you see it was right here. Momentum was all down, a reversal up into these moving averages, a failure, then a move down to our support that we're looking at. That's what we call price action support. And, those are just a number of different ones, but all the same basis, using our momentum indicators, looking for the different pattern, volatility squeeze, et cetera. And then using our, price target analysis to look for, breaks of support, resistance, and where to get in, where to get out. So it's a combination of all these things together that, make it the system to trade with. So just kind of want to give you an overview of that. And if you'd like to learn more on how to, capitalize on directional market cycles, I'll be doing a really extensive workshop next weekend on, how to identify and trade breakout reversals before they happen, the trading tools and tactics used. So we'll be doing this next weekend. And so I've got a couple different packages. And they will give you all the indicators and then the full course and how to use the indicators and all the things that we kind of touched on today. But this will be really in depth, on all this. So let me give you the link real quick, and then we'll go through what all you'll get and what we're going to cover in the course. So the first package is it's $397. With this package, you'll get all the indicators. So you're going to get everything. So all my, you're going to get my dynamic trade model, the full model. You're going to get my volatility scanner, my multi-time frame indicator that I showed you, the momentum signal trigger. This gives you the arrows when momentum shifts up or down. My cycle reversal indicator, extreme range band indicator, opening range indicator. My Fibonacci price target mapping course just did in April. You'll get that. My moving average cross that we use, that you'll get that. It's a really great moving average cross that we use for confirmation momentum, and you'll get a 30-day trial membership that you can start at any point. You can wait until after the course. Follow-up Q&A, and then all about futures trading tutorial and the trading tutorial of the system. So you can see these prices here. These are all the prices on the website, but you're going to get everything here for the price of $397. So these indicators are available for a number of different platforms, and I'll show you TradeStation, Thinkorswim, Ninja Trader, TradingView, Wealth Charts, and so you've got a combination. So if you've got one or more platforms, it's a one-time charge. So this is everything you're going to get $397, and let me make sure that link works for you. Okay, yep, works good there. So use that link, copy it or paste, or click on it, and then you can use that. Now you're going to get all the indicators. We'll get those out to you right away, and then you're going to get, we'll go through the bonuses, but these are all the different things you're going to get. So a lot of content, a lot of great tools to use. Now, if you want just one indicator, maybe you have something already with my indicators, but if you want just the course and everything we're going to do, this package will give you a choice of one of the indicators, but its cost is $197. So with this one, you'll get everything, all the different bonuses, and a choice of one indicator, and the access to the live course recordings, everything, all the PowerPoints, everything of the course. So use this powercycletrading.com/2direct. And with this one, you'll get a choice of any of the indicators that I showed. If you want the multi-time frame squeeze indicator, you don't have to decide today, but you can go through and look, or you can do it after the course or whatever. You get this choice of the volatility scanner, the cycle reversal indicator, extreme range band, opening higher low breakout, momentum flow. So any of the indicators except for the core model. Okay, so you'll get that. You'll also get the fib course, the moving average cross indicator, 30-day trial, and follow-up Q&A, and then our futures, tutorial. This futures tutorial teaches you, what the futures contracts are, how they work, things like that. So it's a really good base case about futures. So you just click on that link there, and that will pull up that link to pay $197, and you'll get everything in one choice. So just pull that up, and you'll see there you get the choice of one indicator, all the other stuff, all the goodies. So those are the two now key packages. Now, if you want these any of this with the alert service, then I've got those as well. So you've got a number of different things you can look at. So here's if you like the Elite Open and Close service combined with the trading tools in the course, you can do this. You'll get 4 months of the trade alert service and 4 months of the Power Cycle Trading Club, which gives you access to my trading room open every day, or Q&As every Tuesday, and some other stuff that we'll go through. So you'll get all that for 4 months. You can stop and start when you want. So if you go on vacation, summer, or whatever, you need to put it on hold. You can do that and just start and stop it when you want. So you'll get this all and all the indicators. So I've got this package. And so I've got within the alert service, we've got basically broken down to kind of 4 alerts that I'll send out. So I'll have breakout reversals. These are going to be just breakout trades based on the volatility squeeze, which will be typically a debit spread, maybe credit spreads. And then we do a lot of different butterflies along condors. So that's another service that would be sent. We do a lot of calendar diagonals. So that's another one that you might get an alert to. And then, specific earnings trades when those come out. So you basically get 4 different potential alerts based on, what's going on, what's the best looking trade. And so you'll have that for the next 4 months, plus the trading club, plus all the tools in the course here. So that's what you're going to get there. So there's 2 kind of combinations here. If you want it with package 1 that gives you all 8 indicators, all bonuses, it's $7.97. If you want it like with package 2, where you get your choice, it's $5.97. So let me give you those, and then we'll go through the course, what I'm going to cover, and any questions, or if you want to look at any trades or anything there, we can do that as well. So here's for the alert service with all the indicators, all 8. So it's powercycletrading.com/DIR alert. So click on that, and there's a 2-pay if you want that. So this one, let me make sure it works, and yes, it does. So if you want it with the alert service, use this link here, and that gives you all the live course, the recording of the course, all 8 of the indicators, all the bonuses, 4 months to the trade alert service, 4 months to the trading club, all that, and $7.97. Or if you want a 2-pay, you can click that for a 2-pay. So the second payment is after the second month. So you get the first 2 months, then you'll have your second payment on that. So that's what you're going to get there. And then, this will be typically 8 to 15 stocks or ETFs per month. So with the alert service, I just send out stocks or ETFs. So that might be a selective earnings trades if we're in earnings season, selective breakout reversals, calendar diagonals, butterflies, condors. Those are the different types of trades that are sent out. So then when they're sent out, like I said, some members just like to get the entries, the alerts to see, what the trades I'm sending out, and they'll do their own thing. But I'll always give you a option trade for any alerts that are sent out. So you get a trading guide, the option with the trading, guide of how to do the option setup. I do at the end of the day, I'll do a setup video to show you, go through a review of the trade. Trades are listed and archived. Then we do a live weekly Q&A, usually every Tuesday, which is also recorded. So you'll get access to that for the next 4 months. You'll get access to my video newsletter at the end of the day for the next 4 months. My virtual trading room, so that's open each morning from 8:30 Central to 9:30, sometimes longer. So come in, ask questions about your trades, or look at the trades we're setting up. And then 60% discounts on all courses and software also on the website. So that would be using direct cycle, power cycle trading. Let me give you that one more time. And then if you want the package, which is your choice of one, I'll give you that one as well. So a lot of good things and choices for you. So think about what you want or need, and then we've kind of got it covered here for you. And so here's if you just want a choice. This is the alert service with a choice of one indicator and all the other bonuses. This is $5.97. So here's the link for that one. All right, so that's kind of kind of a summary of everything. Again, here's the kind of a summary of all 4 alert services together. We've got 80% win rate. And then what we're going to cover, this will start next Saturday, the 17th. So we're going to go through part 1. We'll be going through the 5-step directional trading profits formula. We're not going to be using options, just going to be going through the directional trading system. But if there's an option trade that looks good, I'll point that out. We're going to go through very detailed of how to use the power cycle core directional trading model. So that's the one that I was showing you earlier. That's what we use for everything. Let me just pull it up, kind of go through and show you when we're talking. So here's the core model. So with the core model, you'll get, this shows you the volatility squeeze, the dots when that pops up. It will give you the momentum flow indicators. It'll show you momentum cycle 1, 2. It'll show you the reversals. So that's all part of the core model. And it's got what I call the support resistance package. You can see the dashed red, that's the prior month's low. So that's outlined for you, the prior month's close, the prior month's high. If we put this down to a hourly or anything under a daily, it'll show you the prior day's open, high, low, close. So here's Oracle, just for example. And you can see the dash green, that would be the prior day's high, prior close of the prior day, pivot low in these swing high areas here. And then the moving averages, it'll put in the 50 simple moving average, and the that'll be in there, and it's color coded. So a lot of good features there. So you'll get the core model. That will go through that in great detail. We'll go through how to use momentum flows, for using and spotting, how to use that for your price direction, and how to use it for trend validation, what we look for there. How to use the cycle reversal indicator and the extreme range band, with momentum for signaling price exhaustion, and an advanced alert to a cycle reversal. So this is a really big tool that we use. Then how to use the moving average cost Fibonacci ratio indicator that we put together. I put together here, you can see here, right, this is an example. This is the moving average cross, the fib level on a 2 hours. So you can see a really nice pop to the upside here is the moving average cross. You'll get that, and I'll show you how to use it. Here's the moving average cross on the daily. Where was it? Right back here. Look at that. Wow. Back in March, we had that moving average cross and just trended to the upside like crazy. So you'll get that. We'll go through how that works. We'll go through how the multi-time frame volatility squeeze momentum indicator works. That's the right here, down below here. So you'll get that tool, how that works, and then how to identify the medium and long-term trends for your trades, how we go about using the Fibonacci and moving averages for that. Then how you use price target analysis. We'll go through using Fibonacci price target. Now you're going to get, as a bonus, you'll get the Fibonacci course that I just completed in April. So that's a really extensive course on this price target mapping. So you'll have that. And then we'll go through using the moving average automated trend lines. What are the best time frames to use for your short trades, for your swing trades? We'll go through in great detail the 5 chart patterns using the volatility squeeze pattern, step-by-step process for trading the volatility squeeze using the opening range breakout indicator. Let me show you what that is. So I'll show you how to use that. That will be also another tool that you'll get. So here's the opening range indicator. Let me pull that up, just happen to have that open here. So this is, if I put this on the, let's say 1 hour here. So this identifies the opening range of the day. And then what the tool does, typically when you break the opening range high or low, a lot of times you get a really good follow through signal. So let's take a look here. If we look back here, prior days, I can go in here and adjust this to show you every day prior to on the opening range breakout indicator. Let me just click here, and I'll set this to show every day going back. So here's the opening range high-low indicator. So you can see here on Thursday, it broke that opening range towards the close, had a big follow through. Here's an opening range break to the downside. This was on Wednesday, had the big fall through. So this is a really cool indicator that you can use. So we'll go through how that's used. And then the 5-step entry rules. These are very specific rules. There are 5 steps for every entry that we put together. So these are totally defined, not black, not gray. So you know, step 1, 2, 3, and then you take the trigger, you know, long or short. So it's a 5-step price entry rules using the trading model, reversal indicators, the volatility squeeze, and then profit exit rules. That we'll go through those. Moving averages. What are the best time frames? So we'll go through all that, and then we'll also in part 2 go through all the different chart patterns with more examples and how to spot and identify which ones to look for, you know, for your trades. And then we'll go through using the scanner. So how we're going to use the scanner to kind of update your watch list. So we'll go through the scanner, how to set that up and use it to establish a watch list of these kind of breakout trades, and how to monitor your breakout trades. And then you'll get a library of, you know, past trades that you can look at. So a lot of great stuff there. And we do have wealth charts. Yes, we do have a wealth chart, the indicator for wealth charts. But those are not included in this price package because, you know, that's actually through wealth charts. So if you do want wealth charts, you actually need to, you know, buy those charts from them. Actually, it's a kind of partnership thing, but they are available for wealth charts. So here's a little feedback. Here's from Pam, one of my good old members. I have literally lost thousands of dollars on other systems, but settled on Larry's. His technical knowledge is unsurpassed, in my opinion. His knowledge of using different strategies with low risk, high reward are the best I've found since I started trading in 2003. The system is fantastic. Larry, Pam, here's from Bruce, said Larry's expertise in custom tools provide one of the best, if not best, method of identifying, entering, and managing trades. In the fall Q&As and trading room reviews using these methods on current identifiable trades cement the understanding and confidence in using the power cycle trading model. Ronald said the biggest improvement of trading has been the addition of the power cycle trading momentum 1 and 2 indicators, which are really great for giving that price direction. So we really will focus on how to use those, what those are. So again, you're going to get these indicators, just kind of a highlight. So you'll get my core, if you do package 1, which gives you all the indicators, or package 3, which is the alert service with all indicators, you'll get this core model. So this is the basic directional model that you know, I developed back in actually 2010 that we use. So this has a 5 study set to the model. So you'll get this with all the different studies in it. So you'll get the volatility squeeze. You'll see that when that pops up, that shows you, identifies there's a squeeze, shows you the support resistance package. You'll get that. You'll get the momentum indicators. There's actually a 3rd indicator here that you get with the system. So you'll get all that, and those are available for Core Model Thinkorswim, TradeStation, TradingView, NinjaTrader 7 and 8, eSignal. And I do have these for wealth charts, but you know, you have to, you know, go through wealth charts to get that. It's a different price structure than what I'm giving you here today. But are you, Mason, are you located in the US or where are you? Because if you're looking for a platform, Thinkorswim, it is actually, yeah, I would go with Thinkorswim. You know, I mean, you just download it. You can open an account today and download it, and all my indicators are available right away. Or TradeStation, or, you know, TradingView. So you've got a lot of different choices, but they are available for wealth charts as well. So then you'll get also indicator 2. That's your moment. This is the signal trigger. So these are actually when momentum cycle 1 or 2 go up or down, you'll see these arrows pop up. So let's see, for example, let me show you here. So here you can see the green and the yellow. See the yellow, the green and the yellow, that's cycle 1 and 2. They both popped and fired at the same time. So those are just visual, so you can see when they pop up here. You can see this is a good one. This is showing you cycle reversal is purple, and then cycle 1 is in green. See the arrow pop up, and then the moving average cross arrow is orange, and then cycle 2 pops up there. So these are kind of more visual, but they're tied to the lower studies, momentum 1 and 2, and the reversal indicator. So those are, you're going to get those signal triggers. So that's in package 1 and 3, or you could have that as a choice of one of your indicators if you want. So these are available only for Thinkorswim. And then my multi-time frame alert indicator, this shows you on a top and bottom row. I have them on the bottom of my chart, but here it illustrates it. This shows you everything. We've got this for Thinkorswim and TradeStation. So shows you every time frame in a squeeze and every time frame, the momentum of it based on cycle 1. So you'll get that. And so that's a really helpful indicator there. And here's what that looks like down here. So you can see the bottom row here is momentum. And just for Oracle, you can see the 2 minute all the way up to the 10 minutes positive, and then the 15, 20, and 30 minute are negative. And then it shows you what time frames above it are in a squeeze. So you can do it on one chart. So it saves you a lot of time having flipping back and forth to different charts. So you get that. And then you'll get my cycle reversal indicators. So this is for course package 1 and 3. And again, if you want it as a choice, you can get that. So this is a really very helpful reversal indicator. We've got this for Thinkorswim, TradeStation, and TradingView. So here's that indicator down below. So you'll get that. So you can see here, cycle reversal goes up, cycle reversal here starts to go up. Then we're getting cycle reversals to the downside. It's just kind of chopping, but we'll show in the course how that this indicator is used, how we use it. So you'll get that though. That just shows you what the indicator is. It's a 2-part study. And then you'll get my extreme range band indicators. Course package 1 and 3, this is included, or you can have this as a choice. So it shows you the extreme range bands, based on 2 different extremes and color coded. So it's going to basically give you an alert to a signal of a buying or selling exhaustion, which is your first signal that a security is starting to reverse. So this is a really very powerful, great indicator to kind of give us a forward look of, when to be careful in the market. So you can see Oracle now is getting really stretched, but the overbought, oversold until that starts to reverse down. This could still go higher, but this is starting to get very extreme. And you can see what currently is reversed down, things like just recently, Microsoft had a big extreme. See that Microsoft? So this is an example of just really stretched on the weekly long term. So this tells you that Microsoft has a really high probability potential for a pullback to different, possible moving average, reversion kind of to the mean type thing. So it basically says markets are too extreme. Be careful, maybe, liquidate your longs, or, sell some calls, or, go short. So we use this with a combination of momentum indicators, but it's a really great tool. So you'll get that as well. And so we've got this available for Thinkorswim, TradeStation, eSignal, NinTrader, working on it right now for TradingView. And then you're going to get my opening range high-low breakout indicator. So when you break an opening range low or a high, it's a pretty decent signal in combination with momentum signals to give you, breakout points. So really cool indicator. This is one we started using on crude oil basically back in the 90s. I mean, this is back when I was at Transworld. We developed this indicator, and I've been using it ever since. And then you'll get, if you do the volatility scanner, so you'll get this as well. So it comes with package 1 and 3, or a choice if you do package 2. So this shows you everything in a volatility squeeze, so you can go through futures, whatever you want, So foreign exchange, it'll show you anything and everything that's in a squeeze. And these indicators are also, really do great with day trading. So, that's kind of developed a lot of these for day trading. See these opening range breakout indicators. So they're all developed. They whatever time frame you're day trading, swing trader, long-term trading, they work on every time frame. So they'll be very, very helpful to you on the day trading. I can show you the basic kind of a setup for day trading as well during the course. If you take it, just let me know and I'll go through it with you. And so the enrollment bonuses, you're going to get my price target mapping course that we did in April. So it's Fibonacci and moving averages. It's just a combination of these things that I use to set price targets for profit and defense. So we use Fibonacci part of it, moving averages, price action, support resistance, standard deviation, and option activity. So it's a combination of all of this that are used to establish price targets, upside, targets downside, defense triggers. So 3+ hour course with the PowerPoint training manual of the course. You get that as a bonus. A really great course that will really sharpen your targets, for your price targets for, to trade to. Then you're going to get my moving average Fibonacci ratio cross indicator. So this is used to kind of signal momentum reversals and confirmation. It's got an upper study and a lower study. It shows you the arrow. So here's the moving. So here it is right there. That's a moving average cross up. Here's another one, moving average cross up in yellow. We're not getting it yet to the downside, but you'll get that indicator as well. And so that's really great to confirm momentum. You'll get my Power Cycle Trading Club. So a 30-day trial membership. You can start this whenever you want. If you do, course package 1 or 2, it comes with this. So you get access to my virtual trading room, open every day from 9:30 to 10:30 Eastern. I do a daily video newsletter update every day after the close. Videos are archived. We do a weekly Q&A, typically every Tuesday, live and recorded. Get a trader's educational vault with other good trading information in the for members area, and 60% off on any courses or software on my website, which if you do this now, you won't need it because you'll have everything. So if you want anything else, any other courses that I have, you can just go to my website, if I can find it real quick, and anything that you see on the website, you'll get 60% discount. So you'll get that. And then if you want to stay on as a member, it's $97 a month, or we'll do an annual membership. So then if there's any courses that you might want, you can go in here and go through all the different courses, and you'll get 60% off of the current price. So Ultimate Option Guide course, any of my courses, which are typically option related, and any of my indicators, but you'll have all my tools and indicators, which are shown here. So here's a volatility scanner, right there. And but with this course package, if you do the course package 1, you'll get that as, part of the course. But if you were to buy it, from the site, it's $397, but you would get this as 60% discount with your members code. So you get all that. And here was Jay said, just want to let you know my option knowledge has leaped exponentially since joining your trading room. Reading books is fine, but seeing the actual option trade setup makes a huge difference. And then we'll do a follow-up Q&A, usually the day after. So this will be your support Q&A, plus you get the 30-day trial membership. Or if you do it with the alert service, you get you get this for the next 4 months. Then you're going to get my option all about futures tutorial, so 31-page future guide there, and then another manual on the directional trading model. So you're going to be really covered for everything you need. And here's just one more kind of overlook at the alert service if you want to do that combination. So here's from Waleed, one of my members. He's out of Kuwait. He said, Larry, I have to mention one thing. I'm subscribed to a lot of services who send out trade alerts. Some are good, others are not that great. But one thing that I would like people on this webinar to know is when I get a trade alert from Larry, I do it blindly as time has shown that this man is that accurate in his recommendations. Thank you for your great service. And this was from Dan. He says, you are very diligent and totally thorough with your analysis. That is the foundation of success of your alerts. I paid for my subscription with the first 4 trades I took with you when I was learning just how to trade options. Please feel free to share this with the other participants if you wish. So again, you're going to get, if you do course package 3, which is the alerts, which will be all the indicators in all 4 alerts. That should be $7.97. And then if you get the choice, it's $5.97. So let me give you that one more time. So that should be $7.97, not $8.97. And so here's the link for that one. And again, there is a 2-pay, and so this will be for the next 4 months, 4 months of the alerts, 4 months of the trading club, and you can stop and start when you want. If you want it with course package 2, which gives you all the bonuses, the trading course, and the choice of 1, use this link here, and it's $5.97. So it's Power Cycle Trading DIR Alert 1. So that combination gives you a lot of different choices, maybe too many, could be confusing. So you'll get, 8 to 10, 15 stocks or ETFs per month. Alerts are based on earnings, selective earnings or selective breakout trades, calendar, counter diagonals, butterflies, and long condors. So that's the different kind of ones that you might get. When the alerts are sent out, you'll get a suggested option trade, entry level, profit targets based on the option activity and the price target mapping, what option series to use, stop loss levels and guidelines. Trades are listed and archived for you, so you can go back and review those. And then you'll get the trade setup video review after the trade. If there's an alert trade, I'll do a video review of it that night. You'll also get that video newsletter, which goes over the markets, what trades we're looking for each night after the close. Access to our weekly Q&As, which are then also live and recorded for the next 4 months. Access to virtual trading room for the next 4 months. Open during the morning, 8:30, 9:30 Eastern, 9:30 to 10:30 Eastern, and then 6% discounts on all courses, Traders Educational Vault. So all that stuff, and there's kind of the highlight of the overall results. Here are a couple of different trade examples of recent alerts. So this was on calendar and diagonal alerts. So we've had 80% win rate. We do a lot of these. This was 213. We've closed 161 winners, 10 break even, 42 losers. Here's one we just did recently. This was on IYR, the real estate ETF. So this was a put calendar diagonal. Entered into the 15th of May, trading 84.10. And so we did this as a put calendar diagonal, one of the trades that we like to use, and got out on the 24th. It was traded at 80.60. So went in right here, 84.10 out at 80.60 right there. Did this as this put calendar diagonal. So our cost on the trade, very, very low risk trade here. We had a cost of $95 for the calendar. So this was basically buying the 84 to June and then selling the 26 May, kind of a short trade setup. And so when this hit down to the where we got out of the trade, it was trading right here at 80.66, and the spread went from 260. You can see here 260, and we were in our cost was 95, so up $165 per spread, 174% return on that one. So that was one just recently done. And then we have this Google long call calendar. This was recently done in May. So again, this was a breakout trade. We were looking for a move to the upside volatility squeeze. So we did this as a calendar because, potential to take a long time for the trade to develop. So we got into this trade at actually a calendar diagonal, excuse me. So we bought the 108, sold the 112. And it was trading at, when we got into the trade, it was trading right here at 107.60, got out at 116.78. Again, did this as a calendar diagonal, so got in at 234, and then the spread blew out to 420, so got out there 186 per spread, 79% return on that. So that was a calendar diagonal. We do a lot of these, and then here are a couple of butterflies that we did just recently. And these are trades that we did, butterflies and condors. We've had 129 closed out, 97 winners, 6 break even, 26 losers, 80% win rate as well. These are the lowest risk trades that we send out. Typically, there'll be potential, breakdown as far as stop loss levels, 50 cents, 75 cents, something like that. But then you've got a potential big positive risk ratio of 2 to 1 or greater. Here's one that we did on a broken wing long called Butterfly Microsoft. So it goes through this kind of the detail of how the spread works. When you get it sent out, you'll see here it says new Microsoft long monthly pending trade around 309, looking for a monthly expiration target. So do the long call broken wing Butterfly by the 19 May, 310, 315, 322 at around 85 cents. And then I'll give you any adjustments, exit points, things like that. So those will all be, sent out, always keeping you advised as what's going on during the day. If anything needs to be done, you're always going to get alert from me on that. So that's what that one looked like. So we set this one up right here, and we were targeting up here to a lot of option activity. And we did this as a broken wing Butterfly, certain way to trade it. So we set this up targeting that 315 area. And we did this, a really cool Butterfly spread along the 310, 315, 322. So just kind of outlining that. But the key here was a very low risk trade, $85 per spread. Potential, if you maxed it perfectly, 415 was the max profit. 488% return was the potential. And then we got out at different points, but it went out. We got out here at spread blew out to 221, lesser cost of 85, so up 136 per spread, 160% return. And one more Microsoft, we did this one as well earlier. This was done for max risk of $73. So looking for a put push to this 290 area there. So did that with a Butterfly. Again, very low cost trade, $73 risk. Potential is 427 if it went out perfect, over 500% return. And we got out, this was where it expired right there on the 6th of April. So it was trading at 251, was the profit, up 343% return. So that's just kind of an overview of everything, and be happy to take any questions if anybody else has any questions at all, if there's anything you'd like to look at. So, okay, so question is,